All right. Well, yesterday we talked about how the markets were in a very bad position. And today they're completely unraveling. Frankly, they look like a piece of shit. There's no other way to put it. We have not only did we break the main trend line off of the March 2009 bottom from yesterday, this one here, uh, we then also have broken our other key trendline support off of the summer 2010 lows. You can see we've now come crashing through that today. So where's our next support? Well, let's try and figure this out. If you look here, you know, this was really a big drop back in 2008 once it broke 110. And the market had a lot of trouble in late 2009, early 2010, pushing above that 110 level, 1110 level. So we don't want to scare anybody, but in the grand scheme of things, 1110 is the next main crucial support that we have. I would think it holds. So on top of that, though, let's try and see some other support levels. We talked about 1220 yesterday. Today we pierced below that and printed 1218, I believe was the low, 1217, somewhere around there. So we violated that key support. I thought we'd probably get a little bounce there. Maybe we still will in the coming days or weeks ahead. But overall, the trend is unbelievably broken, and we're likely looking at a test of psychological support at 1200. Nice round number. You don't need to get any trend lines or anything for that. Just 1200 is a nice round number, kind of like Dow 10,000. So we're expecting a move down to 1200. That'll be the first test. And then, aside from that, we maybe have one more trend line we can draw here off of the July 2009 lows to the summer 2010 lows right here. If we get rid of this one that we've broken today, bear with me. So here's our next trend line support that we see. This is right around 1160. Next week it'll be 1170, 1175. So let's call it 1160 to 1180 is where our next trend line support is going to be. And below that, it gets really hard to find a good trend line, and the range really opens up to this 1200 to 1100 range, which is pretty scary to think about. So if you do have a lot of equity exposure, you should use any bounces we may get to reduce some of that exposure. The market is in a very precarious position right now, and although the dollar has been plummeting lately, you can't hurt yourself by raising some cash and maybe waiting for the dust to settle. So let's talk about bounces, where we might bounce to. We absolutely smashed through 1230 today, so we're going to be watching 1230 on the way back up as possible bounce. If we can break 1230, can maybe get a bounce up to 1250 to 1260, but we really think it's going to be really hard to get above the 1260 to 1280 level. There's a lot of people up there, you can see, who supported this bounce off of the June lows here. You can see that channel here. Oh, sorry. they supported this bounce. These people are stuck. So any bounce here to 1260, pushing past 1280, these guys are going to be looking to get out. I pretty much guarantee that. So the market is really broken here on a really long-term basis. If you look at a monthly chart, you can see once again, even off of the bottom here on the monthly, we've had a bad breakdown, and the risk is really to the downside. You have to go back all the way to 2002 to see where the next support might be. You can see this trend line here back from 2002. We've got above it and even broke back below that today. So it's just not good across the board. And once again, if you look at the monthly going back, we're looking at a 10-year monthly chart here. You got to go back a long ways. Once again, that here we're looking at 1050 to 1150 channel, and you can see there was some congestion here when the market was coming off the bottom in 2009, 2010. So if I had to give my best guess, I would say we're likely just about guaranteed to trade down to 1175 on the S&P and get a test there, maybe get some bounces along the way, but I think bounces are going to be sold. People are too scared. There's too much fear out there now. There's no reason to be a hero and go in and start buying. The technical backdrop is 100% broken. So just let the dust settle, see how things play out, and we'll see what the market does from here. But I would say in the grand scheme of things, long term, we're probably looking at 1150 to 1175 for our first real test. And if we break 1150, it's not out of the question to then have to trade down to 1110, all the way down to 1050. So this is really, really bad. And if you're a bull, of course, if you're a bear, you're loving this. You've been short. Market's finally unraveling here. So keep your eye on today's lows, 1118 in the near term, and then 1200 on the S&P, 1175, 1150. Those would be the four levels to watch. 1218, today's low, 1200, psychological, 1175, our weekly trend line from last summer's lows here. Or excuse me, not from last summer's lows, from lows from July 2009 and summer 2010. Those lows, that's where 1175 comes into play. And then 1150, we talked about this price congestion here. So there you have it. Good luck, everybody.